Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schiller here in studio at the New York Stock Exchange. Well, markets are sitting right near record highs after the S&P 500 retreated just a little bit yesterday with a fractionally lower close. Investors will be keeping a close eye on the tech sector as we get some earnings results this week. Of course, technology makes up the biggest portion of the S&P 500 amid the different sectors. It's a big week, of course, for economic data. Americans are focused on inflation. We'll get a double shot of that. Consumer price index data comes out tomorrow, while November wholesale price numbers are released on Thursday. Let's take a look, though, at what is on tap in today's show. We've got a big one today. Former CFTC Chair Chris Giancarlo is going to join me in studio to discuss how the crypto and digital asset landscape could evolve during a second Trump presidency. Elsewhere, small business optimism surged to levels not seen in more than 3 years during the month of November. Holly Wade, the executive director of the NFIB Research Center, will tell us why. And we're going to head out to Abu Dhabi. FinTech TV founder and CEO Vince Molinari is going to join my colleague Trinity Chavez remotely on what is creating the most buzz at the Abu Dhabi Financial Week currently underway. Well, one of the biggest stories on Wall Street this past month has been the meteoric rise of Bitcoin, trading at about $67,000 a token on election night. The price of the cryptocurrency, the most popular one, did surpass $100,000 a token for the first time ever last week. Well, after hitting a record of about $104,000 a token, the price has since pulled back a little bit at just about $97,000 a token right now, still well elevated from where it was just about 6 weeks ago. Well, joining me now with more is Chris Giancarlo. He is a former CFTC chair and current senior counsel and co-chair of Wilkie Digital Works. You might also know him as the crypto dad. Chris, welcome. It's good to see you.
Great to be with you, Kristen. It's actually great to be here at the New York Stock Exchange. I spent most of my career just down the block at 100 Wall Street, so it's like coming home to be here today.
We're so happy to have you, and you have such a wealth of knowledge that we want to tap for our viewers, of course, live streaming on X and other places as well. The digital asset space, Bitcoin surpassing $100,000 a token. What does Bitcoin and the digital asset space look like under a new administration?
Well, it's interesting that you mentioned the jump in Bitcoin from $67,000 or so on election day to where it is now hovering around 100,000. I actually think there's something going on there that perhaps viewers haven't heard before, and that is the recognition that actually Bitcoin may be ending its early immature phase, what some people call derisively as the casino phase, into a new phase of maturity and mainstream adoption. And the reason for that is, under Biden administration policies, traditional financial players have been kept out of the space. They've been warned to stay out of the space because of the debanking of traditional firms and because of the SEC's warning lawyers and others not to get involved in crypto. And we've seen that now through FOIA requests that have been forward that the FDIC actually warned banks to stay out. All of that is going to be taken away. Trump is going to allow traditional finance to move into the digital asset space. And I think we're going to now see the institutional development of this asset class. Major American financial houses, whether it be the New York Stock Exchange and its owner, ICE, NASDAQ, others, as well as major Wall Street firms, are going to move in a big way. And I think that's going to bring us a real maturization of digital assets. And I think the value proposition now is going to increase dramatically. And I think early investors are seeing that.
Yeah, I am curious to know, Chris, on that front, what does that mean for the price of Bitcoin?
I think we're going to see the price of Bitcoin continue. Well, I'm not a prognosticator, and I would never give investment advice, especially as a former regulator. But when the United States and the Trump administration talks about a strategic Bitcoin reserve, other countries will follow as well. When you've got national governments buying and holding crypto, I think that is going to lead to invariably rise in price. You know, when you have a fixed supply commodity, which is what Bitcoin is, demand can only be met with one thing, an increase in price. If you can't increase supply, only price can increase. So I think you might naturally see a commodity like this rise in price.
What does that mean for gold?
It's interesting that gold hasn't seen a similar rise. You know, gold traditionally, when currency was debased, it was always traditionally good for gold. In an analog world, what gold was to fiat currency, we might find in a new digital world, a digital commodity like Bitcoin is, as we continue, unfortunately, to debase our dollar with the money printing that's been going on over the last decade. I think Bitcoin has benefited from that. And sadly, if we continue to debase our currency, we may find Bitcoin to continue to benefit from that.
Paul Atkins tapped to be the crypto czar for the new administration. What does he bring to the table?
So I've known Paul since we were classmates at Vanderbilt Law School back in the early 1980s. Paul's a dear friend. He's a very serious thinker. Paul is at heart a free market a libertarian. Paul believes we need to use our financial regulatory scheme to further capital formation. He wants to get down to the basics of the SEC's role to further more IPOs, more liquid markets, deep and liquid, and focus on how the SEC can facilitate innovations coming to market and raising capital. So I think we're going to see an explosion of American markets under the leadership of Paul Atkins at the Securities and Exchange Commission.
I want to talk more about financial markets broadly. Of course, we focused on the digital asset space. Scott Bessent, another key player, of course, Trump's pick for Treasury Secretary. What does that mean for financial markets more broadly?
You know, the first Trump administration was known for its very forward-leaning and sophisticated financial regulators. I was recently talking with Andrew Bailey, the governor of the Bank of England, and he said to me that during the first Trump administration, he had been in public life 40 years himself, he said it was one of the best financial teams he's ever seen out of Washington. I see Trump now doing the same thing. The pick of Scott Bessent, the pick of Paul Atkins indicates to me that Trump is really looking for the best quality financial regulator team he can put together. And I'm very hopeful that he will do that.
Mm-hmm. What changes in the regulatory landscape under a new administration?
Well, so the first step is to undo bad policy. We've had some bad policy, certainly with regard to digital assets. I mentioned the debanking of the digital asset space, but also activities by the SEC, regulation by enforcement. Instead of actually writing rules for this new innovation, they've sued companies, or if they haven't sued them, they've just issued what's called Wells notices to stop companies in their tracks. We've got to get rid of that bad policy day one. Day two is to deliver on some of Trump's digital asset promises, a strategic reserve, a crypto council, and perhaps a capital gains relief for digital asset transactions. Then thirdly, to get to the actual policy making, we need to get Fit 21, that is Fit for the 21st Century Act, which was a law that passed the lower house, the House of Representatives, but not the Senate. We've got to get that passed. That will work out the differentiation between what is regulated by the CFTC, my former agency, and what is regulated by the SEC. And we've got to get stablecoin legislation done, and we've got to get good rules and regulations out of both agencies. If we get that, we'll have achieved some very good policy, I hope, for the rest of the 21st century, to allow the United States to truly become the digital asset capital of the world.
Chris Giancarlo, former CFTC chair, currently senior counsel and co-chair of Wilkie Digital Works. Chris, thank you so much for joining in studio.
Great to be with you.
Great to see you. All right, well, stay with us because up next, a new study shows that small business optimism is at its highest level in nearly 3.5 years. We'll tell you why with the report's co-author up next.
So now, Eric, this year, GIC is celebrating 40 years in the United States. What has this journey looked like for you?
We are so proud to be celebrating our 40th year in the US. In 1984, we opened up a small fixed income trading shop here. And the idea was we were a global investor, but we wanted to be local. And we thought it was really important to meet your partners in the market, get to understand the trends, and be there with the businesses that you're invested in. So we opened up our first office in what we thought was the most important market, the United States. We opened up an office 2 years later in San Francisco. And amazingly now, even 40 years later, we've got 11 offices around the world, and these are still combined our two biggest offices in the world. Along the way, we've also diversified what we do. So I mentioned we started with fixed income investing, but now all of our asset classes are invested here. So public markets like fixed income, public equities, our hedge funds business, but also our private markets, our private equity team, our infrastructure team, our real estate team. And the US has continued to grow in importance as a part of the portfolio, so it's now almost 40% of the overall exposure.
Now, Eric, tell me, what opportunities are you seeing in today's market?
Well, we always say prepare, don't predict. We do believe as investors and long-term investors that you want to be diversified. So if you look at our portfolio, it's globally diversified. It's also diversified across asset classes, but we do like to look for long secular themes. And so two that we are interested in are digitization. So we've seen a long tailwind on technology, and in particular in the US, which has been a real market leader for the last 20 years. We believe AI is really revolutionary technology, and we're investing in that space in a series of ways. A second would also be decarbonization. We do think the planet is getting warmer, and so there will be significant capital invested against mitigating that. And so over the next decade or two, we do think this is a huge opportunity for firms like GIC that are really focused on investing in these long-term projects, providing long-term solutions.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Earlier this morning, the National Federation of Independent Business released its November 2024 Small Business Optimism Index, and sentiment was on the rise. The index rose by 8 points in November to 101.7 after 34 months of below the 50-year average of a level of 98. It represents the highest reading since June of 2021. And joining me now with more is Holly Wade, Executive Director of NFIB Research. Holly, great to have you on the show this morning. And what was behind the surge in optimism?
Great, it's nice to be with you. So small business owners were certainly eager, looking forward to 2025 to have a more friendly environment for operating their business. It's been a difficult road over the last number of years, as you mentioned. The index has been below the 50-year historic average of optimism for 34 months. That's been a long time for small business owners to be working through some of these challenges, and they were looking for a significant shift in policy direction, policy focus that will best benefit them in operating their small businesses.
I want to talk more about the operations, Holly, the expectation among those surveyed in terms of where they see sales growth heading.
Certainly. So we saw a huge jump in the number of small business owners expecting sales to increase or improve over the next quarter. And along with that, we saw a decent number of those increase in planning capital expenditures in the next 6 months, and also in hiring plans. So the expectation is that they will be able to retain more of their earnings to reinvest in their business. And they are, expecting that Congress and the new administration follow through on some of those promises related to extending those very helpful tax cuts that they were afforded in 2017 with the Tax Cut and Jobs Act, especially the 20% small business deduction. And then a regulatory environment that's more supportive of small business growth in the economy.
What does that mean for jobs and wages?
Sure. So for a lot of small business owners, about 1 in 5 are saying that labor quality is still their most difficult issue in operating their business. And compensation increases, those increased cost pressures in operating their business to retain and attract applicants for those very high levels of open positions are still a challenge for many, especially in those sectors including manufacturing and transportation, and construction. So those three industries, we've seen more small business owners than pretty much any other industry sector say that those labor issues, labor costs, labor retention and recruitment have been particularly challenging for them. And it seems to be continuing going through to the end of 2024.
What's the projection, Holly, in terms of how sentiment changes going forward? We saw, of course, the post-election surge in the stock market, and certainly that did seem to have an impact, as the data show, according to your report, on small businesses too.
So for small businesses, the expectation of not having those increases in business operation costs related to, possible increase in their taxes or regulatory compliance, and also the time required for compliance of new regulations coming on board. A lot of that is now, hopefully, or their expectation is, off the table, and they'll have more time to focus on their business, in expanding their business, in creating new opportunities for their business, focusing on their employees and attracting qualified applicants for, again, those historically high numbers still of job openings. So it frees up some time and money to reinvest and focus on their business, which is what they were in business for. That's, their main responsibility is operating their business. And they're looking for that shift in policy direction that will allow them to have an easier landscape to do that.
I want to hear more, Holly, about the time horizons at which point these small business owners expect the landscape to change, clearly in a more favorable way for them, according to this report.
Absolutely. So one of the challenges is that those tax provisions that have been so helpful from TCJA, they expire at the end of 2025. So there is, 1 year, 12 months for Congress and the administration to extend, hopefully make permanent, some of those provisions that have been most helpful for small business owners. So it's a pretty short time frame as far as DC is concerned in getting some major relief and major kind of certainty for small business owners, in that they can then rely on their tax bill not going up, not increasing, the regulatory environment not producing more challenges for them as far as time and cost. So their expectations are that Congress and the administration get to it and move forward with those promises that will create a more favorable working environment for business owners.
Holly Wade, Executive Director of NFIB Research. Holly, thank you so much for joining.
Thank you.
All right, well, stay with us, because up next, this morning's bell ringer is coming off of a major move. Find out what it could mean for you as a traveler up next.
Fiserv serves fundamentally every American household, largest payment processor and largest fintech in the world.
I do want to talk about Fiserv's third quarter report. It was showing significant growth, and especially when it comes to merchant solutions. Can you talk to me about what you think is fueling this growth and how you expect to continue that momentum?
We had 28% revenue growth in Clover. Our regions outside the US also are growing very, very strong. Our commitment to small business, our commitment to innovation, along with our e-commerce capabilities. So, being able to serve every household across the US and then in multiple countries has given us great geographic diversity and given us great capability, from the largest retailers to the smallest pizzeria.
And you actually just recently announced your partnership with DoorDash on the Crimson program. Can you talk to us more about that and why this is such a significant milestone for Fiserv?
So what we did was create a solution set for DoorDash that allows them to be able to bring a better experience to their drivers, the Dashers. And it's really an integrated approach. It's using a series of products we have. We brought a couple of partners in, both in banking and in some other expertise, but ultimately it's our core product set.
How will this help kickstart Fiserv's expansion into other sectors?
Well, I think in fact it is an opportunity to show how we sit at the intersection of banking and merchant. We are the only property that can sit at that intersection, that we could deliver payment processing, Clover, to a bank.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio. The NYSE listed company ringing this morning's opening bell is shaking up the travel space. And I do want to bring in my colleague Trinity Chavez with more. Trinity, good morning.
Hey, Kristen, good morning. So in September, NYSE listed Alaskan Air Group announced that Alaska Airlines had completed its acquisition of competitor Hawaiian Airlines. As a result of the merger, Hawaiian Airlines, currently a free agent in the Airline Alliance game, will officially join Oneworld in 2026. Joining us now to break it all down, more about the airline alliances and what else to know during the holiday travel season is Nikki Kelvin. He is editor-at-large at The Points Guy. Good morning.
Good morning.
And you know, you joined us all the way from London. That's where you're based. You're here now.
I'm here now, here for the week, and here in person, which is so nice.
Amazing. So, you know, I do want to talk about this merger. Talk to us about what alliances like this mean for the broader airline industry and what consumers can expect.
Okay, so in this case, Alaska is part of one of the biggest alliances in the world, Oneworld. Hawaiian, by contrast, is not part of any alliance. And so this merger means Hawaiian will effectively be joining the Oneworld alliance when the merger takes place. Now, this opens up a whole new world of possibilities for consumers. It means when they're using their points and miles, they're getting access to a really broad range of different airlines, different ways to use their points and miles. And there are certain things we know about the mergers of the two programs, the two mileage programs between Hawaii and Alaska, but overall this is going to be really positive for consumers.
Let's talk more specifically about this merger, specifically travelers going from Hawaii to the Pacific Northwest.
Yeah, okay, so again, it's going to be opening up new opportunities. So if we're talking about using points and miles, if you're part of the Hawaiian Airlines loyalty program or the Alaska loyalty program, you'll have new routes opening up. Actually, only this morning, they've just announced that using the wide-body Hawaiian jets, they're going to be flying from Seattle. It's going to be a new base for the merged airline, and they're going to go to places like Tokyo. So this is huge. Alaska, which is only flying narrow-body jets, will now have access to big planes flying long-haul routes across the Pacific. So these are the kind of things that are really exciting if you're part of either program or you're a traveler with either of these airlines. And if you're a West Coast traveler or flyer, you're really going to benefit.
But Nikki, we're seeing mergers like this occur more frequently throughout the broader airline sector. So talk to me more about how consumers and travelers should approach when it comes to reward deals and maximizing their expenditure when it comes to purchasing airline tickets with these kind of airlines.
Okay, so at The Points Guy, we love points and miles, and
yes,
we love a good deal. And so you always want to be looking at trying to find the best cash deals or looking at the best deals with points and miles. Now, it's important to say that different credit card companies have different loyalty programs. You can transfer into different programs. There's lots of arbitrage there. So for example, Alaska and Hawaiian, you can now transfer between those programs at 1-to-1 between the two programs. But they both have access to different kind of award charts. So you're going to want to look at where you want to fly, check out the different programs, check out the different pricing, and look at the cash tickets, see if you're getting really good value. At The Points Guy, we just upgraded valuation of Alaska miles to 1.45 cents per point. You want to see that you're getting that value. So look at the cash price, look at the price with points, and see if you're achieving the value we think you should be getting.
Now, do you recommend that travelers double down on Alliance, for example, Oneworld and Alaska Airlines right now?
Yeah, absolutely. Well, interestingly, the Points Guy Awards were released this week, our 2024 awards, and we gave Alaska Airlines MVP Gold 100K our best elite status for an airline. And so we're saying that is the best one out there, both because of the access you get to different airlines. The Hawaiian merger really helps there with new access. You have to be on it if you want to win. Flight prices are likely to keep increasing. There are lots of add-ons. The airlines are introducing more fees for things like baggage.
Yeah.
And in light of that, using your points and miles is always going to get you further, and you're going to get better deals. And being part of an alliance means you're going to be able to earn points with more airlines and spend them on more airlines too.
And you know, I have to say that sometimes when you're in line, or you get complimentary upgrades, or even more space seating or something, if they see that you're part of a loyalty program with the airlines that you're traveling with. Is that correct?
Absolutely. The airlines want to reward you for your loyalty. It's more important than ever. The competition is fierce out there, and they want to retain customers, of course. And so with these mergers of different airlines, the programs have become bigger and stronger. But if you're able to achieve status, you're going to be top of those upgrade lists. You're going to get other benefits like lounge access, like free seat selection, like free bags. And all these things are real savings for consumers, especially as they get more expensive.
We like the word free around here. Now, I do want to talk to you about the biggest trends right now we're seeing in the holiday travel season, right? Christmas is just around the corner along with other holidays. So what are the biggest trends right now that you're seeing?
Okay, well, right now, busy, busy, busy. That's the big trend. We just saw on December 3rd, the busiest day ever for travelers. Over 3 million travelers went through TSA checkpoints.
Yep.
And we're going to see even more of that. In the run up to Christmas, 20th to the 22nd of December are going to be like busy times. Christmas Eve and Christmas Day, a little bit quieter. If you don't have to be anywhere, that's a good day to fly. But this means for consumers, you want to be doing things like looking at the TSA website, the TSA app. They have an option to look at waiting times, queue times at TSA checkpoints. And if you go for things like TSA pre-check, taking membership out, it's less than $100. It's going to get you quicker lines. These are the kind of things that travelers need to be doing as trends move towards busy people everywhere, and you want to do better than them. You want to get through quicker.
Amazing. Well, thank you so much for all of that key insights. I know where I'm going to purchase my next plane ticket. Thank you so much.
It's a pleasure.
Again, that was Nikki Kelvin. He is the editor-at-large at The Points Guy. Now, Alaska Air Group will ring the opening bell in just a few moments, but don't take off.
If I go back to 2021, it was really the first time in the company's history that we actually had an investor day where we showcased our first essentially 3-year strategy for the group. And it was very clear, very focused strategy. It was really about diversification, about the fact that we wanted to increase the franchise value of our reinsurance business, but we also wanted to get scale and expand on the insurance franchise. Once you have that roadmap and that vision and you have excellent people, it's amazing what you can accomplish. And I look at where we are now, 5 years later, basically. The company has more than doubled in size. Our stock has gone up over 60% over that period of time, better than the S&P. Our book value per share, which is a critical measure in insurance, is also up over 60%. And we have improved pretty much every facet of the company, from underwriting discipline to operating discipline. But one of the most important things we have done is we have created a culture of inclusion and collaboration. That's frankly what allows us to accomplish what I just discussed. One of the great things about insurance is that we have jobs for everybody, regardless of where you come from. But no, I did not think that insurance was going to be where I ended up. Mm-hmm. I had gone to the Johns Hopkins School of Advanced International Studies for my master's. I have a master's in international economics. I speak 3 languages, and I had a lot of experience in Latin America. So I thought there's got to be a multinational company out there that could use somebody with my talents. But I didn't know what industry, and I didn't care what industry at the time, to be perfectly honest. So I had applied to different companies. And the way I ended up in insurance is my older brother, who had worked for McKinsey & Company for a long time, had said, listen, AIG likes people with your background. And for me, diversification is about a few things. It's about geography. It's about line of business, so property insurance, casualty insurance, aviation, different kinds of things. It's about insurance business and a reinsurance business.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. And as we mentioned earlier on today's show, Alaska Air Group is set to ring the opening bell to celebrate its recent acquisition of Hawaiian Airlines. Ben Minicucci, CEO and president of Alaska Air Group, the parent company of Alaska Airlines, Hawaiian Airlines, and Horizon Air, is going to do the honors on the opening bell podium at 9:30 a.m. Eastern. Trinity Chavez joins me now. And Trinity, a great segment there with the Points Guy. What else should people know about the merger in the travel space?
So, Kristen, it undoubtedly expands Alaska Air Group's research around the world. And now here's what I mean. Following this transaction, Alaskan Air Group flyers are now able to reach 141 destinations directly, including 29 international markets and over 1,200 destinations around the world through One World Alliance and its global partners. Now, while Alaska Air Group's biggest hub remains in Seattle, its second largest hub is now in Honolulu. And the group's other major hubs reside at large outside the U.S., including cities on the West Coast like Los Angeles, San Francisco, and of course, Anchorage. And we're going to talk about all of that and so much more just after the opening bell, Kristen. We're about 20 seconds out, so I think that we should go to that, and then we'll check in a little bit. And again, there's the whole team right there gathering on the bell podium. We're getting images right there, so let's listen into that opening bell.
guests on this trading day, led by Alaska Airlines there on the opening bell podium. A lot of happy faces, of course, amid that deal. And joining me now to talk more about the markets as we hover right near record highs is Callie Cox. She's Chief Market Strategist at Ritholtz Wealth Management. Callie, always great to see you, especially in studio. Welcome.
Yeah, it's great to be here, especially after the opening bell. Always a fun time.
Always a good time indeed. And let's talk about these stocks because they have certainly taken off since the election, right near record highs. A bit of a breather these past few sessions or so. What is your view on the market right now?
Well, I like the breather. We've been through a lot this year, so I'm enjoying the quiet. It is really interesting, though, that we've seen stocks basically move straight up since Election Day. I don't think anybody had that on their bingo card. But it's a reflection of the, anticipation of a more pro-America, pro-growth policy.
Yeah.
It doesn't seem like markets want to consider the nuance there. Of course, tariffs and tax cuts could be more of a boost to inflation, and inflation is the biggest boogeyman that we've had over the past few years. So, I'm watching things happen, watching things settle. A little surprised that we haven't seen, many more ups and downs than we have.
It's interesting. This is always a very common time of year, right? End of the year in December, early in January, for people to look at their portfolios, make moves, adjustments if necessary. And of course, we have a new administration coming in January. I want to hear from you the expectations going into 2025 and what some of those perhaps lofty expectations might ultimately mean for investors.
Well, you're right. Expectations are high, and it's great. I mean, it's good that we're in a place where everybody is happy. They're expecting good things next year. Company profit expectations are quite high. S&P earnings are expected to grow by double digits. Economic expectations are much higher than they were a year ago, which is great. That means that, the economy has made it through a really tough time. But that can be a double-edged sword for investors because when the bar is high, that means that there's more room for disappointment.
In terms of what could be disappointing, I want to hear from you on the jobs market, on earnings as well, because we know fundamentally that is historically what has fueled the overall S&P 500.
Yeah, well, I want to be clear. I want us to exceed expectations and I want stock prices to go up. And I think that there's a good chance that they will next year, as long as the economy stays afloat. But right now, like I said, company earnings are expected to grow by double digits. Profits are expected to grow in every single sector. We haven't seen that in 7 years. And if that happens, that's great. But if you have a company that's performed really well over the past 2 years and loses a bit of momentum heading into next year, then I'd be a little nervous about getting some of those negative surprises. Tech is a sector that comes to mind that has an especially high bar. And Kristen, you mentioned the job market too. I mean, it's great that the job market has been so strong, but at the same time, there are signs of weakening, and I think some people might be overlooking that.
Yeah, and I want to talk about what that might mean for Fed policy. Of course, we know the Fed has a dual mandate, jobs, full employment, and inflation as well, historically near 2%. Still a little bit elevated above that. We'll get the consumer price index data tomorrow. Markets, by and large, do anticipate another rate cut by the Fed next week. But what could this mean for Fed policy long term in terms of the rate cuts that we may or may not get?
Yeah, the Fed has done a really good job so far. And you can see that through the job market staying afloat, inflation coming down back to that 2% mark. Obviously, prices are still high, but the economy is healing slowly. I'm not sure we're anticipating enough what the end of the rate cut cycle could look like. And I think the Fed will cut rates into the first half of next year. Obviously, if the job market falls apart, then the Fed will have more incentive to cut rates, implement larger cuts and then maybe cut a little bit longer. But we're getting close to neutral. We're at 4.75 right now. Fed members think neutral is between 3 and 3.5. That's 5 to 7 rate cuts from now, and we have 8 meetings next year, including the one that's coming up next week. So you put it all together, the Fed has a good reason to keep gradually cutting rates, but I think we might be overestimating how long this era of hopes and dreams and rate cuts could last.
And I'm curious in terms of where we are in this cycle, Callie, what that might mean for some of these unloved sectors that haven't performed as well as technology.
Well, that's where we are in the cycle is a very difficult question because every piece of the economy seems to be in a different step. The job market is slowing. It's under a lot of pressure still. Corporate profits are growing, which makes me a little more hopeful that, this job market slowing could be gradual. But people are having trouble finding jobs. We're not seeing mass layoffs, but we're seeing the beginning of a worrying moment in the job market. If you look at the housing market, the manufacturing sector, those haven't really taken off. They've been frozen by high rates, high mortgage rates. And then you, of course, have companies who have kind of already been through their recession. They've seen profits drop. So we're having to digest a lot of conflicting signals here. And when that happens, you have to look back to market fundamentals. Look for value in markets. This bull has been lopsided. 1 in 4 stocks has outperformed the index. So look at the stocks that have been lagging, understand why they've been lagging, and look for that value.
Callie Cox, always great to see you, especially in studio, of course. Callie is the Chief Market Strategist at Ritholtz Wealth Management. Thank you. All right, well, stay with us because up next, a major financial technology event is currently underway in the Middle East. We'll have more details from Abu Dhabi up next.
You're here at the New York Stock Exchange for our annual Space Summit. This is your first year attending. Talk to me about why it was important for you to attend.
For decades, space was not really talked about, and particularly in the world of investing and early stage investing, it was not a smart investment to make. It was not, viewed as salient or viable given the long time horizons, the capital intensity, and that is all changing. So all of the work that the industry has been doing behind those closed doors, behind the curtain, is now coming to fruition. And so the best time to make these investments, especially in early stage, is just before something is about to happen and having that timing exactly right. And so that timing is now.
Talk to me about, from your standpoint, the criteria in which you consider before deciding who you want to invest in.
The fact of the matter is 776 is a generalist firm. And so this is not our deep area of expertise. We are an inch deep, a mile wide across different sectors, which is a beautiful position to be in, to really understand how all of these economies fit together. And for me, the interesting thing about space is that they're actually creating their own new economy. And so the in-space economy for me is wildly fascinating. And the opportunity, from an investment perspective is massive. And the opportunity and the capabilities that this is going to breed for us here on Earth, for humanity, the human side of this is absolutely fascinating for me. And so we typically make one moonshot investment per fund. And so we're relatively new to the space as investors, to the sector, I should say.
Yeah,
the sector of space, yes. and so I'm really here to learn. I'm here to understand what people are talking about, where the industry movers and shakers are. But the deeper I get into this, the more and more obsessed I've become.
And where would you say the different areas in space are you targeting right now?
There's a lot of...
Welcome back to NYSE TV Live, everyone. I'm Kristen Schroller here at the New York Stock Exchange. Abu Dhabi has been a hotbed for financial events this month, and NYSE TV Live is all over it. Last week, we spoke with Super Bowl champion Russell Okroon about a new sport, Bitball, taking place at this week's Bitcoin MENA conference in Abu Dhabi. And I want to send things over to Trinity Chavez, who has more on another big event taking place in the Emirate. Trinity.
That's right, Kristen. Abu Dhabi Finance Week kicked off on Monday, bringing global finance leaders and innovators to tackle big trends like fintech, AI, and sustainable investing. It's a major moment for Abu Dhabi's role in shaping the future of finance. Fintech founder and CEO Vince Molinari is joining us now. They're on the ground all the way from Abu Dhabi with more. Good evening, Vince.
Hey Trinity, good day, good afternoon, good evening. We're wrapping up here, day 2 in Abu Dhabi. You hear the music going, the festivities are about to begin, but it was an amazing day 2.
Now, with fintech being a major focus this week, what are some key innovations or trends being highlighted there on the ground?
Well, it's really incredible. So much of the conversation has really been surrounding digital transformation, the embracing of blockchain and crypto, and really being propelled, as we know in the US, by our recent election, President-elect Trump coming into office, but reaching all the way across the world to Abu Dhabi, UAE. The enthusiasm about crypto right now is at an all-time high, and trading at all-time highs, by the way, as they correlate together.
Yeah, of course. And you know, Vince, this is an event that you have attended over the years, but how would you say Abu Dhabi is leveraging this event to position itself as a global leader in finance and innovation?
Yeah, amazing question, Trinity. We started here 3 years ago. Each year it's gotten exponentially bigger. And it's really ADGM and their leadership and really embracing regulation with the most innovative technologies that have set the stage. 20,000 participants this year, 650 speakers. You had Ray Dalio from Bridgewater today. We had Robert Smith from Vista Equity Partners. So it's kind of become the who's who that are convening here every year for Abu Dhabi Finance Week.
And you know, as you said, artificial intelligence, AI, Gen AI is shaping the future of finance. And I would be interested to know, what are some of the key insights or what's being shared there on the ground talking about the role of AI and how it's transforming the overall industry?
Well, it's not only transforming, it's the pace in which they're talking about the transformation. It's this bit of the move from the large language modeling, how agents are being trained, how that's getting smarter, faster, and small language modeling, how that's applying to finance, anything across the board with workforces. So it's really the investment capital looking to engage around AI is really kind of the storyboard here today.
And sustainability is also another critical topic. What are some of the main takeaways on how finance leaders are addressing climate goals and impact investing?
Look, I think little known or less known parts about Abu Dhabi, UAE, is this renewable energy, this transformative energy, a move away from petrol and oil, and really how they're looking at engaging across clean tech technologies and really making the standard and putting those big deployment of investment capital to move forward. And here I say a bit of leapfrogging going on here.
Now, I know this is only day 2, Vince, but so far, what have been the most exciting or surprising moments in Finance Week?
Well, look, I think it's just the sheer size and scope. I think the conversations here in Abu Dhabi talking about New York Stock Exchange, frankly, exchange-traded funds. We talk about it all the time, right? The crypto ETFs, how that's setting the pace and how that's partially driving the value of BTC as this cycle of investment inflow into the ETFs are generating the purchasing that are absorbing the liquidity from a lot of the whales that were holders. And now we're seeing that jump up well above 100,000. We're stabilizing here and overlay U.S. policy into the mix. Those are the conversations that really are lighting up the conference that I wasn't necessarily expecting all the way here in Abu Dhabi.
Now, you know, we have about 45 seconds, well, actually 30 seconds left, Vince, but briefly talk to me more about what you anticipate for the rest of this week. I know that this event wraps up on Thursday.
Well, tomorrow, big day for us, FinTech Day. I have the pleasure of emceeing that day for the 3rd year in a row. And the conversations that are happening here around the world that are resonating, anything fintech, blockchain, AI continues to be the theme, and we'll hear so much more about it, Trinity. And got to talk about it when I come back.
Looking forward to having you back on the show to talk about all things Abu Dhabi. Vince Molinari, founder and CEO of FinTech TV.
Thank you, Trinity.
Now, coming up, one crypto platform is giving investors a new way to gauge the industry. So stick around for those details.
So now, Chris, tell me about the MLS Innovation Lab program and what it means for Major League Soccer.
So we launched Innovation Lab last year because, MLS has always been at the very forefront of innovation. We were one of the first leagues in the world to launch automated review. We, have our global media partnership with Apple, but we never had a formal innovation program. And so we thought this would be a great opportunity for us to take all the energy from our league, our clubs, our youth leagues, and centralize it and build one central program that we call the Innovation Lab. We see hundreds and hundreds of companies apply every year, and we select the best 6 or 8 to work with us on a 9-month program where they get to really test and try out their technologies. We get to spend time with amazing young founders, and together we get to build the future of sport in North America.
Now, when it comes to evaluating companies to invite to participate in the program and for MLS to potentially invest in, what are you looking for?
Of course, it always starts with what's the idea? Does this founder have something we think is compelling that we can actually use in MLS or in one of our academies? And so that's the starting point. What's the technology? What's the product? And is it interesting to us? And then we do all of the normal things. We spend time with the founding team. We understand, what their vision is, who they are as people. Finances of the company, of course, matter. And then we evaluate all of that, and we go through a deep screening process, lots of cuts, and then come up with the final couple companies.
And tell me, what have been the biggest learnings so far from the MLS Innovation Lab? And personally, what have you enjoyed the most?
So the best is spending time with founders. I mean, you get to do it every day. The energy that startup founders bring is just incredible. Their ingenuity, their drive, their passion. I would highly recommend for any CEO, any executive, to go get out of your office and go spend time in the startup world and bring some of that energy back to your company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here at the New York Stock Exchange. We see the S&P 500 gaining in today's session, these major indexes right near record highs. Well, a moment ago, FinTech TV's Vince Molinari took us inside everything happening at Abu Dhabi Finance Week. It's just about 6:20 p.m. there in Abu Dhabi this evening, as it's 9:46 here on the East Coast. Well, staying on the topic of financial technology, our Judy Shaw sat down with the co-founder and CEO of Knox Networks, who shared how her company is looking to disrupt the fintech industry and what lies ahead in 2025. Take a look.
Natalia, welcome to Floor Talk. It's great to have you on the show.
Thank you so much for having me. I'm super excited to be here today.
Thank you. So now, Natalia, Knox is at the forefront of financial technology innovation. What are you building and how do you plan to impact the industry?
So Knox is a multi-asset transaction ledger that is providing secure movement of all regulated financial assets and money. And this might actually come as a surprise, but today when assets and money move around, there are a lot of ledgers and rails behind that ecosystem and behind the movement of all those assets, and that can be highly inefficient. There's too many systems. And so from our perspective, we're providing a ledger as a service, really where financial institutions can maintain their connections to and transact with all of their external accounts. So traditional cash accounts, custodial accounts, digital asset wallets, and then internally we provide them a real-time view of all of their assets and cash positions across their business. And the reason that's so important as a solution for industry is because today, financial institutions really struggle with things like reconciliation across all these different systems, or settlement risk or fraud. And there's general lack of interoperability and lack of real-time monitoring across their asset classes. And so, especially as financial institutions continue to grow and work across traditional assets and digital assets, that becomes even more complex. And so we really want to be the bridge between those two ecosystems.
Now, Natalia, what about your background has led you to become an expert in the space?
I've spent the last 10 years building a career at the intersection of traditional finance and digital assets with an expertise on future of money systems. So I worked on the capital markets desk at BlackRock and also led some of their initial work in the digital asset space. Also worked at companies like Google X and Cello, where I got to see how stablecoins and blockchain systems were contributing to money movement. And I'm a part of a few global initiatives that are really helping set the standards for these new technologies and policies. So one is I co-founded the Stanford Future of Digital Currency Initiative, which is a partnership between the United Nations and a bunch of global banks. And then I also sit on the Bretton Woods Committee, which is a committee of the top financial executives and CEOs that are working on helping maintain a disruptive and innovative financial system.
And what are some of the milestones that the business has seen, and what do you plan for 2025?
From our perspective, when you're building a high-performant ledger or infrastructure for regulated financial institutions, you need to make sure that your technology can withstand the high degree of checks and balances that are going to be required of you. So we spent our early years in R&D trying to build the best multi-asset ledger and working and piloting with some of the largest global banking institutions, and also received global awards for our technical approach, so including at the G20 and from the NSF and White House. And this year we've really been focused on commercialization within single institutions. So not just deploying our tech for banks, but really thinking about how can our technology be applied to fintechs or exchanges or even asset managers. And so our goal is really to continue to build on those partnerships as we head into next year with our launches. And then in addition to that, start to capitalize on the network effects that our technology offers. So then we can start to connect the different institutions that are actually leveraging NOx.
And be sure to watch that entire interview on the NYSE's YouTube page or by downloading the NYSE TV app. Well, elsewhere, one cryptocurrency platform has just launched a new tool to help investors gauge the latest activity in the space, and Trinity Chavez has more.
Thanks, Kristen. That's right. CoinMarketCap is bringing transparency to the forefront with its new CoinMarketCap 100 index, designed to track the top 100 digital assets and provide a clearer view of the industry. Joining us now to talk the significance about this new benchmark and her predictions for the future of crypto is Alice Liu. She is the head of research at CoinMarketCap. Good morning, Alice.
Good morning. Great to be here. Thanks for having me.
It's great to have you. Now, Alice, what would you say is CoinMarketCap 100 index? Can you explain to our viewers exactly how it compares to the S&P 500?
So as the crypto market matures, the lack of standardized index has hindered institutional adoption and transparency. CoinMarketCap's new CoinMarketCap 100 index, that's akin to the S&P 500 for crypto, fills this gap by offering a real-time market cap weighted benchmark that tracks the top 100 digital assets, providing a clear view of the industry's most significant players. So if I were to summarize the significance here, I think there are a few points that really jumped out to me. Number one is it tracks the top 100 cryptocurrencies that represents roughly around 88% of the total crypto market cap. And this is the only index that would showcase a diverse sector. So it's not just Bitcoin, it's L1 smart contracts, it's DeFi, infrastructure, AI, gaming, and meme coins.
But I do
also it provides, yes.
No, go ahead, finish your thought.
It provides real-time insights. So we update the index every 5 minutes. And it is a one-stop way for investors to track the over $3 trillion worth of assets. We also provided this for free to the whole industry. So with our API, it should be quite easy integration and access to for the crypto community. And looking forward, we are actually looking to explore the possibility of having tradable financial products on top as well, both spot and perpetual. This is to provide an easy access for investors to gain exposure to crypto.
Alice, how does this index help overcome barriers to institutional crypto adoption?
Yeah, sure. So right now, I think as the industry matures, people want to go and beyond just Bitcoin. So therefore, we wanted to have a one-stop solution for both investors and also for crypto community to be able to track, invest, access, and quantify the performance of the crypto market. So this will be a very simple solution here that we built.
And what does tracking DeFi, AI, gaming, and memes say about crypto's evaluation? Or evolution, rather, sorry.
Yes, exactly. So we have seen, for example, since November, the whole industry have moved forward with different performance in different parts of the crypto industry, different sectors. Therefore, we can see going into 2025, there will be certain sectors within the crypto that will benefit more from this momentum. And as crypto have now evolved to beyond just Bitcoin, but also it's the different parts, it's the infrastructure, right? It's the decentralized infrastructure, AI, gaming, some of the application cases that we're seeing in the industry. They should be able to help gain exposure and insight into those sectors as well.
Yeah, talk to me more about that transparency for investors. How do 5-minute updates improve that overall?
Yeah, of course. Right now, there is no live aggregation of the data. And this one will be the only one that aggregates the market cap weighting for this index. As we launch right now, it's 5 minutes. We are updating that to make it more frequent. So the end goal of this is to be able to have treatable financial products on top, which will help investors gain access to this via one-stop solution.
And how would you say this index could influence investment strategies by 2025 or moving forward?
That's a very good point, because 2025 will be a very important year for crypto. And we have seen the momentum of institutional adoption by Bitcoin ETFs. And for example, other ways for them to gain exposure to the market have all not being aggregated together. So this one is supposed to be, as an industry matures, there should be a very easy way to transparently put the data of the market together for the investors to reference and to invest. So this is our products that we bring to help solve this problem.
And just quickly, can you tell me more about the impact of API and how it could have an overall impact on the adoption across various cryptocurrency platforms?
Yes, so right now we are making this freely accessible to all. And the idea is we want this to be a benchmark for the industry. It is built by crypto people for crypto people. And hence, we have built up the API for media to quote, for publishers to quote, but also for investors to have a point of reference where they can quantify the crypto market performance. Right now, people tend to use Fair and Grid Index, which CMC also have. But as an industry matures, right, you would want a way to quantify that performance in the market instead of just using the sentiment. So we are providing additional tool to be able to precisely express where crypto is and how far it's progressed today.
Well, there's going to be a lot to look out for this next year. Alice Liu, Head of Research at CoinMarketCap. Thank you again for joining us.
Thank you very much.
Now I do want to bring my colleague Kristen Scholler back as we wrap up the show. Kristen, Alice brought up a lot of good points talking about the overall cryptocurrency market and everything that we have to look out for as this new administration takes place come January. So I'm sure we're going to be covering it here on the show.
All right, guys, numbers are in.
Trinity, you're exactly right. Such a great show that we put on today, of course. And that's going to do it. I'm Kristen Scholler for Trinity Chavez and NYSE TV. Thank you.
In life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.